Hello everybody, this is AK. I am back. Thank you so much for the very positive response to my last video and of course the video before that as well. So I'm back. Today's video is about something very frightening that you see on the screen in front of you. Stock market crash is coming soon? Question mark and exclamation mark. So it's not just a question. Some people think it is happening soon. But before we do that, I just want to highlight the point that I have enabled my YouTube channel's community tab. So if you see there's a community tab on your screen in my YouTube channel, you can click on it and you see I have updated some, I've updated the community tab with some photos and stuff. It is meant to be a bit more light-hearted. So if you want to have some comic relief, for example, you can go to my community tab and hopefully that puts a smile on your face. Yeah, don't always think about stock market and stock market crashing and that kind of thing, right? But now we are going to talk about the possibility or the probability of a stock market crash happening soon, right? I first saw this when I was browsing the news, and from time to time I would actually watch the news or read the news about financial stuff. And Robert Kiyosaki said that Warren Buffett and Michael Burry are actually waiting for the stock market to crash. And that got my attention because, of course, we know who Warren Buffett is, and Michael Burry has been well known for shorting the market at the right time, and he actually called the subprime crisis long before most of us heard of it or knew of it, right? And if we look at the news in the last few months, Warren Buffett has been hoarding cash, and since the start of this year, he already had about $130 billion in cash, and a few months later, he actually sold $29 billion worth of stocks. And right now, in this month of August, he's holding almost $150 billion US dollars worth of cash. And that got some people wondering if Warren Buffett thinks that a stock market crash is coming, right? And so he's waiting. Possible, maybe. Then, of course, there's Michael Burry. Michael Burry actually has a rather big short position against the stock market now, and apparently it is to the tune of like $1.6 billion. $1.6 billion short per position. So when you short the stocks, obviously it is because you think the stock prices would fall, and that's how shorties make money, right? So what do I think? Well, I think that if we have been following Warren Buffett and the things he have said, I don't think he's holding so much cash because he thinks that the stock market is going to crash. He would tell you that, oh, I don't know what the market is going to do tomorrow, next year, year after next. He has no idea what the market is going to do. But what he does know is valuation. And he said before that he doesn't like to hold on to too much cash. He would like to put as much cash to work as possible, right? And put them in good businesses and that would help him generate more income. So the fact that he's holding on to so much cash is probably because he can't find good businesses at valuations that make sense for him to invest in, right? So I don't think he thinks that a stock market crash is coming soon, but I do believe he thinks that current valuation is unattractive, right? As for Michael Burry, who is shorting the market, I don't like shorting the market. I don't believe it is a good thing to do. Why do I say that? Of course, you can make money shorting the market. I'm not saying that you can't, but personally, it's not something I would do, because it's basically selling what we don't have, right? That would be a naked short, or you borrow something from someone and sell that something, and that something doesn't belong to you. You have borrowed from someone, you're selling that something, and that's called a covered short, right? In both cases, it sounds a bit dishonest to me, like selling something we don't have or selling something we borrowed from somebody. I know that there'll be people who don't like what I've just said, but it's just what I believe, right? And how I feel. So please don't be offended. AK is mental, right? So it's not something I would do. But from a very practical standpoint as well, when you short the market, and if you should be wrong, the losses can be unlimited, right? But if you buy a stock and if you turn out to be wrong, the only thing that you lose would be whatever money you use to buy the stock, right? So if we are not very experienced traders, and we have no experience or very little experience, or we're not very good at shorting the market, I think from a practical standpoint, it's probably better not to do it. Okay, so that is about the stock market that crashing and how it might be happening soon. I will tell you what I'm going to do, right, later on. But first, let's talk about REITs, or something about REITs. This one is quite recent. It has happened this morning, and I thought I should share with more people in my YouTube channel, because it's interesting, and it's probably something that people who are investing in REITs or are thinking of investing in REITs should be interested in. This is a comment from a reader in my blog, and it went like this. I am always curious for those REITs that pay out only 90% of their income, distributable income. Nothing much is revealed on what was done to the 10% retained. I would imagine that the amount retained might have gone into funding AEIs, or asset enhancement initiative, reducing debt or gearing, or to offset part of future acquisition costs. Is my understanding correct? As I often do not find subsequent evidence of those mentioned in future financial reports. Maybe you can use some examples from IREIT Global and their past usage of the 10% distributable income which they retain, or share your thoughts regarding my understanding. And the next question was, you often mention only invest in REITs with good balance sheet. How do you tell between good and bad? Right. So my reply was, IREIT Global has been paying out only 90% of its distributable income for some time, while retaining 10% for working capital and capex, or capital expenditure. Right. Capex took place in one of their Spanish assets, for example, before they could lease out the space to become a data center. And capex is also happening now for the Darmstadt property, maybe I pronounced Darmstadt wrongly, which is in Germany, and that property was vacated late last year. And I said, when a REIT distributes only 90% of its distributable income, it helps to strengthen their financial position. We want to have more assets than liabilities, and money is one of the best assets to hold for businesses. Actually, it's not just for businesses, it's just for anyone, right? We want to have as little borrowings as possible, especially during bad times, and IREIT's gearing level is relatively low compared to its peers. And in fact, it's probably one of the lowest in the S-REIT universe, right? And if we invest in REITs, this is something that we want to bear in mind, right? So that's something about REITs, So if we are investing in REITs, or if we want to invest in REITs, that is a pertinent consideration. Okay, now the next point, like I promised, I'm going to share with you what I'm doing, or but remember, this is just what I'm doing. It's not something that I say everyone should be doing, right? in response to the question that stock market crash, is it coming soon? And so what should I do, right? Second point, I like being paid while I wait. I like being paid while I wait. So all of us know that the stock market has cycles. There will be ups and downs. So while waiting for the next down to come, I like being paid, right? So in my blog, I talk about how I'm staying invested in income producing assets, and those would be like staying invested in businesses because I hold their common stocks, and these businesses are income generating and they pay me a dividend, so I'm being paid. And I also hold cash, right, or cash equivalents. So and of course we want to put this cash to work, and for me it's putting them in fixed deposits and in T-bills and in Singapore savings bonds, for example, and these pay me more than what an ordinary savings account would pay me, like 0.25% per annum. So whether it is investments in equities or investments in fixed income, I'm being paid reasonably well while I wait for the next down cycle to come. And it will come, it's just that we don't know when it's going to come. We certainly cannot predict, but we can prepare for the next down cycle, right? So if Mr. Market goes into another depression, well, we are ready, okay? And what am I thinking of accumulating? It is no secret. Anyone who has been following my blog for a while, you don't have to be following my blog for a long time, just even for maybe the last 1 year, would know that I'm looking at increasing my investments in the local banks, right? I want to increase my exposure to the local banks so that they form about 40% of my portfolio, right? And everyone, of course, will be interested also what's the prices that I'm looking at, right? You remember at the beginning of this month, I published a blog post on why I wouldn't be buying any more stocks of OCBC at that time, because I said that OCBC stock price was showing signs of big pump and dump, right? And it reminded me of a run-up in stock price back in February 2022. The pattern to me looked the same, and that's where the trader in me came in, right? With my knowledge of technical analysis and how I look at stock prices on their charts, and I recognize a pattern, right? So I warn that if we are focused as investors for income, we will not chase rising prices, and the prices were being pushed up very high by people who are pumping up the price, and we of course should not fear falling prices, right? Because our focus is on income. So at that time I said I wouldn't be adding to my investment in OCBC because there were signs that it was being pumped up, and of course after being pumped up later on, chances are it will be dumped, right? And I say, although that if you want to know something about technical analysis, I can say something now, and that's if you look at the chart, right, you see things like momentum oscillators, and I like to use a momentum oscillator called the money flow index, and in that oscillator it shows that OCBC was very much overbought, number one. And number two, I also like to look for divergences, for that I look at prices and the volume, trading volume, right? So, and I saw that the volume was declining while the stock price was trying to push higher, and that's never a good sign, because volume is the fuel that drives a rally. So if your stock volume, right, is declining, that means that stock price, the stock, right, is running out of fuel, and so the rally probably would not be able to continue. It's not sustainable. So I say that was a red flag. And even though we could see stock price being pumped up to 13.50 per share, And I said I would not be surprised if the stock price were to drop back to support. At that time, the immediate support would be about 12.40 per share. So because you know, someone who wants to invest in OCBC want to get the 40 cents DPS, the dividend per share that was being announced, they might end up losing more than $1, right? If they buy at if they had bought more at a higher price, right? So I said no point paying $13.50 a share to get a 40 cents dividend, only to see price declining by $1 or so back to immediate support. And in fact, I think OCBC now is lower than 12.40 per share. So if you are interested in looking at prices, you really have, and being a trader, you really have to teach yourself or pick up technical analysis. And the easiest way is to just pick up some books and start reading. Okay. As for me, I still want to accumulate more of DBS, OCBC, and UOB, right? But I'm waiting. And as I'm waiting, I'm being paid, like I said just now. The prices I'm looking at, I know people who want to know that, so I might as well say it. OCBC, the next support is probably about $12.20 per share, because that's where there was a gap, right? There was a gap, and the gap would probably be covered. So 12.20 is probably a price that I could consider if I don't have any exposure to OCBC now, and I would like to buy some. But the banks won't be paying dividends except for DBS. UOB and OCBC wouldn't be paying dividend anytime soon. The next time they pay dividend will be sometime next year, right? I think it's May probably next year. So I have many months away. Now, of course, DBS will be paying quarterly. So there's a chance that we could buy even cheaper, because there's no catalyst, I think, for share prices to move higher, right? And this is one of those instances where, as investors for income, we would be interested in prices because we want to buy cheaper, right? But like I say, if I don't have any exposure to OCBC now, I could consider getting some at 12.20 per share, because that's where I see immediate support. But in the longer term, I wouldn't be surprised if we see $11.50 being tested, right? It could happen, and in very pessimistic situation, we could even see $11, right? Which is a long-term support. So if that should happen, I'll be buying a lot more OCBC. Right now, I'm just quite happy building up my war chest, filling up my war chest, and just being paid, collecting dividends, collecting my coupons from my fixed income investments. As for UOB, that's also something that I want to look at. And during evening with AK and friends, I say UOB will be growing very quickly because of its acquisition of Citibank's operations in 4 Southeast Asian countries. And their recent results show that we are right? 85 cents dividend per share. Superb, right? Very happy. And I kept saying for a while that I was giddy with joy. I'm still giddy with joy. And for UOB, what about the share price? I said we could see $28 per share again, and I still think so. But if that were to break, then we could see $27 per share. So if I haven't invested in UOB yet, and not such a significant investment for me yet, I could consider buying some at those prices. But in the long term, UOB's chart shows that it's quite possible in the longer term, if Mr. Market should become very pessimistic, we could actually see, get ready for this, $24 a share. Yes, that is a distinct possibility. But like I always say, technical analysis shows us where the supports and resistance levels are. It doesn't tell us whether they'll be tested. But I want to be ready to buy more if it ever happens, $24 a share. As for DBS, I said the immediate support would be like about $31.87, because that's where I saw a neckline. And if that were to break, then we could see $30 per share. And in the longer term, what about the longer term? If Mr. Market were to be very pessimistic, we could actually see $29 per share. So from all those prices, which is what the charts is what the charts show me, we can see that OCBC seems to have the most limited downside, right? Followed by DBS, and UOB seems to have a risk of a bigger downside if Mr. Market should go into a depression, right? But just bear in mind, technical analysis is not about certainty, it's about probability, right? And nothing is certain, but we want to be prepared for in case it should happen, right? And I think that about does it for this video. I just want to make a quick point about my plan for future videos. I have produced many videos in the last 2 weeks very quickly. In fact, for many months, I've been producing many videos. I think to avoid burnout, I might actually reduce the frequency of videos to maybe once a week. Right? I see my friends at the fifth person producing videos about once a week. I think that is probably quite a sustainable pace. I don't want to disappear for months, right? If I can help it. I mean, people have been following my blog for a long time would know that AK is known for sometimes just disappearing from his blog for weeks or months. The longest I think was about 3 months. I actually went off into another world and spent a lot of time in the other world, gaming lah, you know. So I don't want to do that with my YouTube channel if I can help it. So maybe once a week is a good frequency. We'll see what happens. I'm doing YouTube now because I really enjoy it. It's a hobby, just like blogging is a hobby for me. I do not have any ambition of becoming a YouTube star, right? Because that sounds like work to me, and AK is lazy. I don't enjoy working, so I don't plan on being a YouTube star. I just want this to be a hobby which I enjoy, right? So I hope if I do only produce 1 video per week, you won't be upset with me, okay? So till the next time, remember, if AK can do it, so can you. Please like this video. I'll talk to you again soon. Bye-bye.